Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me to discuss the 4 areas of digital assets that investors should be aware of and why there is a breakout in DeFi is Jeff Dorman, CIO of Arca. Jeff, it's great to have you with us. Welcome to Trade Talks.
Thank you. Great to be here.
Jeff, before we get into the 4 areas of digital assets, explain to our audience what DeFi is and why it's gaining momentum.
Sure. Decentralized finance, or often called DeFi or open finance, is really just a marriage of traditional banking and financial services with this new decentralized technology that has been brought to us via blockchain. So that's anything from lending, borrowing, insurance, asset management, derivatives, and arbitrage. All the things that you can do in the traditional financial world is now being able to be done without an intermediary, without a bank, without a brokerage account. And technically, Bitcoin itself can be viewed as decentralized finance, but there's a whole slew of other digital assets now that are focused specifically on these different niche products.
What are the parallels and differences between digital assets and traditional asset classes?
Yeah, it's a good question. I always like to compare digital assets to the fixed income market. I think most people in the space prefer to talk about equities or commodities, but really fixed income is the best parallel. And that's because if you look at the fixed income market, there's not one place that you can say you're a fixed income investor, because the natural next question would be, well, what does that mean? Are you a convertible investor? Do you look at high yield? Do you look at investment grade? Are you doing govies, munis, callables, puttables, et cetera? There's all these different unique features of the fixed income market. And that's what the digital asset space now is as well. There are so many different types of digital assets and so many different structures within this new asset class that you really need a different valuation technique and a different understanding to focus on the different areas here. In terms of some of the differences, from an investing standpoint specifically, there's no prime brokers. Everything you're doing manually at this point. You're not being able to park your assets in one place. And really, probably most importantly, there's just no 100-year history like you have in equities and fixed income with the Graham and Dodd evaluation model or the Frank Fabozzi fixed income models. All this stuff is being built in real time. So my team and others in this space are really building the valuation models of the future in real time.
What else exists in digital assets besides crypto, besides Bitcoin? What else are you looking at?
Yeah, we're looking at a lot. This is a vast universe and it's growing fast. We at Arca tend to never use the word cryptocurrency, mostly because this space has evolved so much more beyond just what we have historically thought of as cryptocurrency. So we look at the 4 areas of digital assets, and cryptocurrency being just one of those 4. So your cryptocurrencies are Bitcoin or other forms of money that are actually trying to make it onto the global macro stage, really be a competitor to your US dollar, your yen, your euro, and other forms of actual payments. The other 3 areas of the digital asset space are a little less understood. The second one is what we call protocols and platforms. This is equivalent to your base protocols, like your internet protocols, like HTTP, or your email protocol, TCP/IP. These are platforms and protocols that are usually more invested from the venture capital world, because you have to really see the future 5 to 10 years out to see which one of these is going to be the real base layer of the next internet-based assets. These are much harder to invest in because there's no real technique to value the tokens that sit on top of these protocols and platforms, but inevitably 1 or 2 of them are going to be massive. The other 2 areas are much more investable, and that is asset-backed tokens. These are tokens that are backed by real revenue streams, real assets, real income streams. And these are much easier to model with traditional free cash flow analysis. And then the 4th area of digital assets is what we call pass-through tokens. And these are probably the most interesting in this space, because this is really where you get to the heart of what blockchain can offer. It's quasi-equity, quasi-utility instruments. And the best example I can give you is, imagine if Amazon Prime was a tokenized asset, so that in addition to getting all the benefits that Amazon Prime gives you, discounts at Whole Foods, discounts on shipping, movies and music, you also got to participate financially because you were getting a piece of all the revenue brought in by Amazon through that. And this area of pass-through tokens is growing so fast, and it's so unique, and it's so interesting.
Yeah, that really is interesting, Jeff. And I want to go back to valuation for a minute. How do you find value in digital assets? And is this an asset class where active management is key to your investment process, because the markets are open 24/7?
Yeah, for sure. I think value is really based on finding out, does the token actually accrete economic value in any real way, right? In any asset class, when you're investing in something, you're either believing that there is going to be a buyer who is willing to pay a greater price. Every equity multiple is that, right? A price to earnings ratio, an EV to EBITDA. That's based on what you think somebody else is willing to pay for those cash flows. And then you also have the intrinsic value, right? What is the value of the actual asset today? In the digital asset world, we are developing models to get that. What is somebody willing to pay for that? But in many cases, there actually are real intrinsic value to these assets as well, especially in the asset-backed tokens and these pass-throughs, because you can actually model what those cash flows and what those yields really are. In terms of active management, I think it's almost impossible to be a passive investor in this space right now. Even if you look at some of the digital asset indices that popped up 2 and 3 years ago, they're already incredibly stale with regard to what the components of those digital assets are, and they really no longer represent what this industry has evolved into. So for me, active management is partially because of the volatility, because of all the risks in the market that you need to be aware of and be able to have a risk management strategy. But it's also because you can't keep up with the evolution of the space using any sort of a rules-based index or a passive type investing strategy. You really have to be on the pulse of all of the news and information that is dominating the news cycles 24/7.
Yeah, you certainly do, Jeff. And with that in mind, let's wrap with your outlook for digital assets, because as you had mentioned before, this is such a young asset class. Certainly doesn't resemble, let's say, more traditional equity or bond market structures that we've seen. I think that's kind of exciting because it is a footprint that hasn't been laid out yet, and it is moving much quicker than I think anyone had ever expected. So, in terms of more scalable adoption, in terms of more institutional adoption, what's your outlook over the next 5 to 10 years?
Yeah, I never get price predictions for anything, and I never get growth predictions in terms of size. What I can tell you though is there's no doubt in my mind that the size of this overall asset class is going to be many, many fold higher in 3, 5, 10 years than it is today, because there's so much being built in this decentralized blockchain-based world. With Bitcoin specifically, I really believe that this is the perfect storm for something like Bitcoin as money, because you definitely are going to see inflation in the next 5 to 10 years based on all of the money that is being poured in. And at the same time, you have a real need for a mutable ledger of money where there's no government influence and there's no manipulation from central banks. So Bitcoin, to me, no doubt is going to grow. And I think you're going to see a lot of different on-ramps into the digital world besides Bitcoin that ultimately spill into Bitcoin as well, meaning as you start to see projects like Facebook's Libra, or even some of the central bank currencies that are being built out of China and probably eventually in the US as well, and even our own project here at Arca, the Arcoin, which is a treasury bond product that has been tokenized. All of these on-ramps into the digital world will help people understand what it means to hold your assets in a wallet and not have to use a bank or a brokerage account. And once you understand that technology, you will start investing and using everything else. And the analogy I always use is when I first got an iPhone, I didn't play games. I wasn't a gamer. But once I was in the iPhone ecosystem, somehow Angry Birds ended up on my phone. And the same thing is going to happen in the digital world. Once you understand a wallet, regardless of what brings you in, you're then going to expand into all the other things that this ecosystem brings us. And if you combine that with the smart people that are coming into this space and the innovation, the technology, the growth potential is just massive. And we're incredibly excited to be investing and to be building in this ecosystem.
Yeah, it certainly is exciting. Jeff, appreciate the insight. Thanks for joining me on Trade Talks.
Thank you. Pleasure to be here.
Thanks for joining. You got it. And thanks for joining me, Jill Malandrino, Global Markets Reporter at Nasdaq.